Hello everyone. Welcome to MSA 602 Governmental and Not-for-Profit Accounting course. In this course, we will focus on the accounting standards for the not-for-profit entities and governmental entities. We will start with not-for-profit entities, and first part of your course will focus on Chapter 18 and some CPA materials on not-for-profit accounting. So let's start Chapter 18. In Chapter 18, you will learn the different parts of financial statements of a not-for-profit entity, and you will learn how they report their net assets and the classifications of net assets. And you will also learn about different type of contributions, conditional, unconditional, pledges, and at the same time we will cover a few more common topics related to not-for-profit accounting. For example, mergers and acquisition and their tax exempted status, and some special not-for-profit entities, for example, hospitals or healthcare organizations and private universities. First, we'll focus on some general characteristics of not-for-profit entities. But before starting that, do you know not-for-profit entities play an important role here in the United States? We actually every year we give 2% of our GDPs to the not-for-profit entities, and the USA is the most charitable nation in the world. So a not-for-profit entities receive some donations from the donors, and the donors don't expect any financial return in exchange of those donations. Also, these organizations do not have any purpose to provide any goods and services and to make profit. Well, several not-for-profit entities provide services to us, we will see, and we give some fees in exchange of those services, but their objective is not to make profit. And you will see there are several types of not-for-profit entities here in this country and all over the world, and they are charitable institutions, religion-related, civic organizations, or educational institutions, or health entities. Now, if you look at here, you see that in 2017, the total amount of the money and other resources that were given to not-for-profit institutions is more than $400 billion, and a huge amount of it, these are coming from people, you and me. About close to $300 billion are coming from individuals. Of course, other organizations and foundations, they also donate money. And if you see here, in these recipient list, religious organizations are on top, and also education, human service, healthcare organizations, art, culture, humanities, environment, and animal-related organizations. All they are receiving billions of dollars from the donor. Now, if I ask you to mention some renowned not-for-profit entities, you might tell us Red Cross or United Ways or Goodwill Stores. Yes, they all are. Now, if you look at the latest numbers, and I just Googled it and I picked the nation's top 100 charities, you see here, United Way, Feeding America, Salvation Army, St. Jude Children's Hospital, Direct Relief. They are the top 5 not-for-profit entities based on their donations. And you see, they are getting huge amount of donations, and these are just private donations. Now we will focus on some basic goals for the financial statement or the accounting standard framework. So FASB states that the financial statements of not-for-profit entities should focus on the entity as a whole. It used to be a fund accounting or fund-based statements, but now after 1990, FASB states that we have to focus the entity as a whole. And you will see several accounting standards and rules are pretty much similar to those to the for-profit entities. So the two basic characteristics of their financial statements that I just mentioned, of course, they serve some goals. So reporting the entire entity as a whole as opposed to based on different funds actually gives the external users to learn about the performance, overall operating performance of the entire organization. Although their objective is not to make profit, still donors and other external parties would like to know how efficiently they are utilizing those donations, and it would be good to see their financial positions and performance as a whole for the entire organizations. And I also mentioned that most of their accounting standards and rules are very similar, and we can also utilize by those for-profit entities. And the reason here is that FASB didn't have to create entire different specific standards for not-for-profit entities. So most of those we can use for-profit businesses, and you will see most of those standards, journal entry recording systems are pretty much same compared to for-profit entities. Still, there are some differences, and now we will see the major differences between private not-for-profit and for-profit businesses. As we mentioned and learned that not-for-profit institutions receive huge amount of donations, but usually there are no counterparts like commercial businesses. If a for-profit business receives any money, they are obligated to provide some goods and service, but when a not-for-profit entity receives any donation, there is no obligations or there is no counterpart. They will expect something in return. However, some private not-for-profit entities may receive some donation with donor-imposed restrictions. A healthcare institution or a private university may receive a fund, and the donor could specifically tell them that you will spend this fund for this specific purpose. So that means there might be donor-imposed restrictions. And there is no single figure, just like net income, that will describe the performance of the not-for-profit entities. Now let's see the different parts of the financial statements of a not-for-profit entity. You will see it's pretty much same, just like the for-profit businesses. And of course, FASB makes the accounting standards for not-for-profit entities. In this chapter, we are focusing on private not-for-profit entities, and FASB makes the standards. When we'll focus on governmental entities, you will see GASB prepares the standards. Now, there are four parts of their financial statements. Number one, statement of financial position, which is very similar to balance sheet. Statement of activities, very similar to the income statement. Statement of cash flow, you will see the same picture. Now, there is one additional statement that now FASB made it required for not-for-profit entities. It's called a statement of functional expenses. It used to be required only for healthcare organization, but now FASB states that all type of not-for-profit entities need to include it either as a separate statement or as a part of their statement of activities, showing different columns to show the different categories of expenses, or as a footnote. The purpose of this statement is to show how they are spending their money among different categories of expenses. Now we will dig deeper. these different type of financial statement parts. Now, statement of financial position is similar to the balance sheet. You will see assets, liabilities, and net assets. And you see here comes one major difference between a for-profit versus not-for-profit. So for not-for-profit, you will never ever see any part called owner's equity. You will never see a statement of owner's equity because no one owns a not-for-profit entity. Rather, it's based on some donations. So that's why you cannot call anyone as the shareholder of these not-for-profit entity or the owner of that not-for-profit entity. So there is no owner's equity part. Rather, they use the term net assets. So net assets is nothing, just the difference between assets and liabilities. You will see when they report net assets, they categorized it into two classes. Net assets without donor restrictions and net assets with donor restrictions. As I mentioned, they may receive some donations and donors could impose some restrictions. You will see different type of restrictions. For example, it could be a purpose related. That means they need to complete some purpose and they need to spend money for a specific cause or purpose. It could be time related restrictions. For example, the donors may say that you cannot use this money in 3 years. It could be permanently restricted. That means a donor could give you huge amount and that could be an endowment and they will never ever use it. Rather, the return from that endowment, they can utilize it for different purposes. So that means this is permanently restricted. Previously, net assets were categorized into 3 categories. Of course, there is no restriction, but with donor restrictions, there were 2 categories. One is temporary restriction, another is permanent restrictions. But now, after 2018, FASB made it simpler. You don't need to categorize temporary or permanent. Rather, you will just put all those under with donor restriction level. So now I'll take you to the textbook and I'll show you a quick picture of their statement of financial position, which is very similar to a balance sheet. Now you will see the example of their statement of financial position, 10th Avenue Hope. As I mentioned, they will put all of their assets and liabilities. They also follow the form of liquidity. Most liquid or near cash assets they will post first under current assets, then they will have non-current assets. They will show total assets and they are showing 2 consecutive years, just like the balance sheet of a for-profit business shows. And then they will add those up. This is how you will get total assets. The other part of this statement is liabilities and net assets. Don't forget, they will not report owner's equity, rather they're gonna report net assets. And you will see they showed their current liabilities first, then long-term liabilities. And here you will see the net asset parts. Instead of owner's equity, you will see the net asset parts. It's nothing, just the difference between assets and liabilities, and they have their restrictions. One is without donor restrictions and another is with donor restrictions. So when they will show net assets, they will show it based on their restriction categories. And when they add up their total liabilities with net assets, that will be equal to total assets. For example, here, the current year, you will see their total assets here, 8.254 million. They have their current and non-current liabilities, and if they have any commitment contingencies, they will show that. And they also have these net assets altogether must be equal to, Here 8.254 total liabilities and net assets equal to total assets. This is how the statement of financial position will look like.